Good morning, fabulous Tax Goddess Nation. Today we want to talk about getting more money for your business sale. Now, there's two different ways, in my opinion, to get more money for a business sale. One of them is increase the value of the business, right? Increase that sales price. And so we're going to go over some specifics on that front. But the other side of it is when you sell, keep the money from taxation. Okay, so that's a huge piece of it that a lot of people don't think about. They think about raising that value of the business, but not necessarily how they're actually going to keep the money from going to the government when they sell that business. So let's start with the first one. So there's some basic ways that you can start now. Generally, if you want to sell a business, you want to start 5 years in advance. So start now on creating more value in your business. Now, the first one is going to be record keeping and systems. Okay, so if all of your records are in your mind, you have no set of books, you don't have a system, you don't have a checklist of if you hire a general manager, they need to do this. If you bring on a burger flipper, they need to do this, and this, those processes, okay? Between the record keeping, the accounting, and the record keeping of the systems, right? Making sure that not only do you have systems, but that you actually have a record of those systems. So somebody could walk in and pick up your business, effectively turnkey, walk in and pick up your business. That's going to decrease your price. So you need to have both of those things in place. Okay. Now, the next thing is, what kind of cash flow do you have in your business? What kind of money is coming in? Is the money that's coming in one-time sales? That decreases the value of your business because that means the person who's buying your business has no recurring source of revenue, right? So on the other side, if you have, for example, signed contracts with your clients that last for the next 5 years, and this is how much they're going to pay you every month, every year for those contracts, that is going to significantly increase the amount of value of your business, right, for that sale, because the new owner walking in, again, does not have to start from scratch, right? They are walking into a stream of revenue, at least for a certain length of time. Now, that may only be 12 months, that may be 5 years, that may be 20 years, right? Maybe you've got a government contract, something like that. But either way, you've got a recurring source of revenue that the new owner is purchasing, all right? So that's going to greatly increase the value of the business on sale. Now, the other piece here is sometimes, how do I want to say this? Sometimes, business owners get so excited to, to sell their business, all right? But not always selling your business is the best option, okay? Sometimes, once you've put in systems, once you've put in checklists, once you are watching your margins, that's the next piece, watching your margins, okay? Once you've done these things, you might just want to keep the business, right? Now that you've hired staff to maybe replace you, kind of depends on why you're selling the business. If you're done and you're ready to retire, but you could keep the cash cow, you're making good margins, you could keep the cash cow, you might want to keep that business rather than sell it, right? You might want to pass it on to your children. So looking at estate planning, right? Generally, if you've got a good business, a solid base, a good team, good systems, right? It makes it much more valuable for somebody else to buy, but that also brings you as the owner quite a lot of value because you might actually be able to take a vacation. So there's some pretty awesome bits there. If you can get these pieces in places, you may just decide, forget selling it, I'm going to keep it, okay? Now, margins, you heard me mention margins. Guys, if you make no profit, if you make no margin, another buyer is not going to want your business, okay? Now, we see this a ton, and this is where it comes into the last bit, which is not overpaying your taxes when you sell the business, if you decide to sell, okay? Many business owners implement tax strategies. That's what we do, right? $523 million worth of tax savings. And if you want some, reach out to us, book an appointment with my team, okay? But if you've implemented tax strategies, a buyer is going to see the profit in your company look really, really, really small, because that's how you don't pay money to the government in federal taxes every year, right? If your profit is small, your taxes are small, therefore you get to keep more of your money, okay? So when we talk about margins, generally what we're talking about is gross sales minus cost of goods sold, okay? Cost of goods sold. So there's really 3 different main areas of a profit and loss. I won't go into a ton of detail here, but you've got gross income, which is just how much you bring in total, gross, okay? Minus cost of goods sold. Cost of goods sold are the costs that you have to spend in your business to be able to deliver your product, okay? So if you've got a widget that you build, that you create, it's the cost of materials, it's the cost of labor, it's the cost of whatever else goes into actually making the widget, shipping to be able to sell it, to get it to somebody, okay? If you're in a service business, your cost of goods sold might be your team, your staff, might be HR benefits. It might be some, I was about to call it overheads, but really overheads related to your staff, to having the team to be able to deliver that product or service, okay? Those are all cost of goods sold. Generally, the third category is what's called overhead expenses. So overhead, selling, I think it's SGA, selling general and administrative expenses, okay? These are overhead things. So for example, if you're paying your children from your business, they might be a part of cost of goods sold, but generally they might be more of overhead. Now, overhead expenses are most normally where a business owner is going to put tax strategies. Generally, they go into the overhead section of the profit and loss. So the reason why we want margins are generally gross income minus cost of goods sold. That's your profit margin, okay? Generally, you want profit margins to be as high as possible because that means properly reported, but that means another owner is going to get that super high profit margin and they can decide all those selling general and administrative expenses where they want their money to go. Is it going to go pay the kids? Is it going to go to a master's exemption, right? Is it going to go to some of these tax strategies? Or is it going to go to them and a part to the government? Okay, so you want those profit margins pretty high. Now, the very last piece of it, and of course, our specialty here at Tax Goddess, that's how we've saved $523 million and counting, right? Is when you decide to sell the business, if that's the path you're going to go down, how do you reduce the amount of taxes on your business sale so you're not handing over a chunk of money to the government, okay? Most business sales, there's lots of factors here, okay? But most business sales are going to pay a minimum of 20% in taxes to the government when they sell their business. So if you sell your business for $10 million, even for $1 million, okay? And it's a business, you built it from scratch, right? Most likely you have zero basis. It's a big, long discussion. We could talk about it some other time if somebody's got a question. But generally, if you sell your business for $10 million, the government's got their hand out going, okay, minimum 20%. If you're in California, if you're in New York, if you're in New Jersey, if you're in Pennsylvania, some of these really high tax states, you could be looking at paying upwards of 50%, okay? So you're thinking you're getting a $10 million take-home pay from selling your business, you end up with 5. Okay, that's probably going to put a big dent in your retirement plans, okay? So there are multiple ways as tax goddesses that we reduce people's taxes on the business sale. You've heard me talk about a few of them. Definitely search our YouTube channel or check us out on Facebook in our Facebook group if you are thinking about selling, because you've heard and we talk all the time about the DST. We talk about right now, for example, there's something called an opportunity zone. You've also got maybe a conversion. There's lots of different types of conversions. So going from a business into something else, there are some deferrals that we can do. So really, depending on what your goal is and what you want that money for, there's lots of ways to get out of taxation, not forever, but a massive deferral for 10, 20, 30, 40 years, sometimes even generation skipping, okay, of completely getting out of paying tax. So there's some really, really cool things, really, really cool options, but today's video is specifically about raising the value and taking home as much cash as you can from your next business sale. So if you have any questions, don't hesitate to reach out to us. You can book a meeting with my team at taxgoddess.com. Reducing people's taxes is our specialty, okay? We are ranked in the top 1% in the country for what we do. So if you've got a big sale coming up, definitely reach out. I hope y'all have a great morning and we'll talk to you later. All right, bye.